Hello and welcome to Core Finance. It gives me great pleasure, as always, to introduce David Buik back onto the show, Senior Market Commentator at Panmure Gordon.
Good morning.
Right, headline in the front of City AM, tech giants face 130 billion showdown. Is this the top of the market, M&A and crazy prices being paid for tech stocks?
That's top of the headline in the Financial Times as well. No, to answer your question, no, I just think that just shows you how M&A is still there buzzing the market up, and a lot of people feel that valuations are full at the moment and people scratch the back of their heads as one record after another keeps going. And the one way that we've managed to keep the market going is by M&A activity, by acquisition, and also, of course, share buybacks, but people are beginning to see through that. I think this is an interesting one. At the price, I don't think it'll go through because I think there's a scream from Qualcomm shareholders that this is a hopeless undervaluation. They're also in the process of paying $47 billion for NXF, another semiconductor, which hasn't gone through yet. This has been taking its time over the last 6 months. And, you know, in the case of Broadcom, obviously they want to take on Intel and Samsung. And they put down an attractive offer as far as they're concerned of $60 in cash and $10 in stock. But it's not enough. And what was interesting is that I don't know whether the market just said, well, this deal is going nowhere, but neither share price moved that much yesterday. It was up about 1.5% each, or 1.4%, I think, each of them. I think probably if Broadcom are really serious about this, they're going to have to step up to the plate, because when you think that the kind of deals that went on last year, I think it was Dell Computers, bought EMC for about $67 billion. This is a total valuation of these two companies does look a little bit light to me. I have to say I'm not an expert from just what people tell me. So, you know, I think it'll be back to the drawing boards to the Broadcom shareholders saying, look, are you really serious about this? If so, you're going to have to pay quite a lot more.
And you mentioned M&A, it's a sign of health in the markets, and it's always good to see. Do you see any other areas, now we're looking at the tech sector there, but any other areas where we could see more M&A activity? Certainly, if we're looking at a higher interest rate environment over the coming years potentially, that companies now will actually want to get together and make these deals whilst debt is relatively cheaper.
Well, we've had, you know, a number of bites at the cherry, you know, when we had, you know, Heinz having a look at Unilever. And, you know, there was the fact that really all it did was tell Paul Polson he had to get his act together and give
he did.
And drive shareholder value, and the share price is up significantly from where it was. Household goods, you know, you can always look at healthcare is the area, apart from as I said, the technology sector. Healthcare is really buzzy. We're getting older. We need more drugs. People are going to have to acquire, because we went through that pain barrier of the biotechs, you know, 20 years ago when people paid a huge premium and got nothing. So now really you've got to either buy a biotech company that's got a track record, or you've got to buy the individuals that are going to deliver you your new drugs, which you're in desperate need of, particularly with the population becoming older and older as the years go by. I mean, look at most of healthcare companies during the course of the last 6 months, particularly in the United States of America. They've really blazed the trail, and I'm not so sure that, you know, and I think the fact that Trump has failed to get rid of Obamacare in its fullest thing and reintroduce anything else probably has aided and abetted the sector quite well.
Understood. Certainly a sector to look out for going forward. David, thank you very much for joining us today.